Hey everyone, Colby Cox with Global America Financial, and today we're going to be talking about American Amicable's Family Choice Final Expense product. Now, if you missed our presentation on the Senior Choice, make sure you click this link above and it'll take you directly to that presentation. Let's get started. So, the Family Choice is a simplified issue whole life final expense policy, and your premiums are guaranteed for the life of the policy. You get two death benefit options for 0 to 49, which is the Family Choice product. You have different modal factors depending on how the client pays, and it has a policy fee of $30 annually, okay, which is commissionable. Now, with those death benefit options, if you're on the healthier side, you could get an immediate death benefit option, which means you get full death benefit day one up to 35K. That's the max, all right? But if you have some health issues, but you qualify for return of premium, you then could go up to only 20K, so a little bit less. But the way it works is you're going to get in the first 3 years your premium plus 10%. So let's just say your client or you pay $1,000 and then you were passed away in the first year after paying $1,000, your death benefit would be $1,000 plus 10%, which would be an extra $100. Your family would get $1,100, and that is for the first 3 years. And then from 3 years and on, from 4 years and on, you get full death benefit. Here are some of the different riders. We'll talk about these in a little bit here in a second. For the immediate, you get a lot more availability to riders. For the returner premium, you only get a couple. You get level term, which is only your spouse, and you get terminal illness. So what are these riders? Okay, you have two no-cost ones. First one's terminal illness accelerated benefit rider, where you can receive up to 100% of the death benefit when the insured has a life expectancy of 12 months or less, okay? 24 in some states, which Texas is one of those states. So again, you can receive up to the full death benefit if you're labeled with a terminal illness, which is 2 years or less. The other one is a confined care, and this rider is where you're confined to a nursing home at least 30 days after the policy is written. Okay, so you got to wait about 30 days, where you can then receive a monthly payment. Your monthly benefit will be a 5% of the face amount up to $5,000. So two riders that come with the policy just in case you or your client has some type of confined care or terminal illness. The accidental death benefit rider, these are additionals that will have to be paid for, but it provides additional amount of death benefit should the insured die as a result of an accident. Notice the issue ages, you get it for the Family Choice product. The minimum amount is $2,500. The maximum is going to be equal to your face. So if you have 20K death benefit, that's the max, okay? And it terminates at age 100. You've got a child insurance agreement, which provides $3,000 per unit of level term insurance on the lives of children until the earlier of the child's age 25 or the applicant's age 65. So your child over 25 or you over 65, this rider goes away. It can be converted to a permanent plan, okay, at the rate of 5 times the amount of insurance. And the primary issue ages are for the insured 15 to 60. So if you're above 60, you don't get this rider. Can't enact it, can't use it. And the children have to be between 15 days to 17 years old. Okay, it is $850 annually per unit, and you get a max of 2 units. So that'd be $6,000 of total coverage as a child's insurance agreement rider. You get the level term insurance rider, but it only covers a spouse, and it provides a 20-year level term insurance on that spouse. The spouse issue age must be between 50 and 49. Minimum is $5,000, maximum of $35,000, but it cannot exceed the primary insured's death benefit. So if they have a 20K, the spouse can only be covered up to 20K. And then you have waiver of premium, and it will waive the payment of each premium of the policy in the event of a total and permanent disability of the insured. Excuse my typo. Again, 0 to age 49, you can have this. Now, as an agent, there's no medical exams or blood work. It's a yes/no application. Very simple. They'll do an MIB, which is drugs. They'll look at they'll do an MIB, which is your medical information, and then they'll look at RX, which is prescription drugs, and it does have a liberal build chart, okay? There will be, for younger ages, a telephone interview if the issue ages is 40 to 49 only, okay? And they do have multiple languages. Depending on different impairments, they'll look at it. They'll look at the prescription drugs. They're going to take into consideration, because they're not taking blood work, they're going to look at everything else to make sure they can give a fair offer. They do have a mobile app. Okay, so if you're an agent and you're in the field, you can get on the phone and do this mobile application online. They also take a wet signature via fax or through their app drop on their website, and they do have marketing materials available. Okay. So now that we have a quick understanding of how the Family Choice product works and what it looks like, let's take a look at how to illustrate it. So we're going to go to their website. And we're going to click right here on illustrations. We're going to scroll down until we find Family Choice, and we're going to click it again. Now here is one page. You're going to put all the information in. So Bob the agent. Then you're going to put in the client's information. So I will put just the client. You can put in birth date, which is what I like to do, or age. For this case, I'm just going to put age. And because it's the Family Choice, I know it can only be between 0 and 49, so we'll do 40. We'll go male, non-smoker, and we're in Texas. Okay. Now, here are our death benefit options. Remember, you don't have graded on Family Choice. You only have immediate or return of premium. So let's just say immediate. We have a healthy person. And how do they want to pay? They want to pay monthly. Now, one thing I like about the software is you can put in 3 different amounts. You can put in a death benefit amount, and it will spit out the premium, or you can put in a premium amount, and it will spit out death benefit. Let's put in death benefit, okay? Because I know the death benefit can only go up to $35K. So we're gonna go 15,000, 25,000, and 35,000. Okay. Here are the different riders. I'm not going to put any of the riders, but this is where you would do it. We're just going to go with what are these amounts, and you click continue, and it's going to pop up the file. Once you open it, it will take you directly to it, and here it is. You're going to have all 3 options there. So right here we have the client for $15,035.79 every month. Okay. If we scroll down, here's $25,057.89 every month for this policy. And then if we go down to $35,079.98 every month. All right, see how simple? Let's take a look at an example if we were to put in premium. So we delete this same option. We can go, okay, I want to do, let's go $25 a month, $35 a month, and $45 a month. Take a look at it. We click continue. Same thing. It's going to pop up the download, open up the download. You get the same option. For 25, you get 10,119. 35, you get about a little less than 15,000. And for 45, you get a little more than 19,000. Okay. We'll take a look at one more, the return of premium, so you can see how that works. Same thing. What I'm going to do is I'm going to do 10,000, 15,000, and 20,000 just to get an example and see how it works. We click continue, pop up the downloads. We're going to click that button right there, and here we are. So for 10,000, it's 3306, but notice you have the asterisks because remember, in the first 3 years, it's your premium plus 10%. So let's say they pay 1 month, they pay their 3306, and then they pass away. Knock on wood. That means they would get 3306 plus 10%, which would be $3.31. That's what the death benefit would be. Okay, so depending on in the first 3 years how much premium to pay, they're going to get that premium plus 10% as death benefit. After those 3 years, in year 4, you'll get the full death benefit. We come down here to the 15,000, 48.26, and then 20,000, 63.47. And that right there is the Family Choice. Very simple, very straightforward. But if you have any questions, please make sure you reach out to us, send us a message, put us in the comments. Make sure you subscribe to our channel to check out some of our other videos that will be coming out soon. And you have a great rest of your day.